everyone, it's Kelly and welcome back to CUMIC Weekly, where we bring you the latest Chinese stock prices and market trends every single week. If you're new here, simply hit the subscribe and like buttons right here to miss out on any future updates. This week, Chinese stock prices showed some signs of weakness. Let's break it down. Now, as reported, China plans to increase its deficit ratio by a whole percentage point to 4% for 2025. They want to keep their GDP growth target around 5%, pretty much the same as this year. The idea here is that the government is looking to lift market confidence and expectations by setting these big ambitious targets. But here's the catch. Despite these efforts, because the stimulus policy didn't quite exceed market expectations and lacked some detailed execution plans, the overall market sentiment remains on the downside. Let's talk about what's happening globally. In the US, the Fed did what many expected by cutting interest rate by 25 basis points this week. But looking ahead to January, it seems they might put a pause on the rate cuts, with just a 50 basis points reduction anticipated for the entire year of 2025. As a result, the dollar index surged past 108, reaching its highest level since November 2022. And as you might guess, a strong dollar generally puts pressure on commodity prices, including steel. Next, let's examine the supply and demand side. This week, China's apparent demand went up by 110,000 tons, and inventory is down by 200,000 tons. It's pretty clear that mills aren't having the best time, with profits hard to come by. Production is on the decline. Demand is dipping too, pretty typical for this season. Nonetheless, one silver lining here is that steel inventory levels are relatively low compared to recent years. So inventory pressure isn't too heavy, which means that short-term supply-demand conflicts aren't too bad. So what's next for the market? Looking at the situation with steel, pressure from supply and demand balance isn't too drastic, though both exhibit weak performance. However, there could be increasing pressure coming from the raw material market, with both iron ore and coking coal inventories are riding high, and since iron ore prices are still hovering above finished steel prices, there's a notable risk of price falling if raw material prices start to significantly weaken. If raw material prices start to weaken significantly, the cost support for steel could break down, potentially causing steel prices to drop below their recent fluctuation range. Well, what's your take on the Chinese steel market? If you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like buttons right here. To all of you watching, we wish you a Merry Christmas filled with cheer and prosperity. May this festive season bring you good health and happiness to you and your loved ones. See you next week. Bye-bye.